Okay, we're good to go. So good morning and thank you all for joining. We are very happy to be here 5 weeks running now for our Saturday morning coffee and market conversation. We started doing this focused around what we know best, which is mortgages and the housing market, just to provide some value to our community. This week we thought it would be impactful to do a segment specific to buyers, since we are about to be up and running again as usual, business as usual, by next Thursday. So we're really excited. Today, our panelists are here to just be real with you. We're kind of in some uncertain times, and the best thing you guys can do is stay informed by the professionals. So these guys all have a wealth of experience and knowledge in both real estate and mortgages, specifically in our local community. So we're super thankful to have their time this morning. I'd like to have each of our panelists briefly introduce themselves, a little bit about their background and their specialty. Then we can get started with some topics and questions that I have queued up for them. One thing that will help as we go is if you guys can all just keep yourself muted. It's in the bottom left corner. That'll help, cut out any background noise. And then in the top right corner, it may be beneficial for you guys, if you're not familiar with Zoom, to use the speaker view. It's just in the top right corner of your screen. Then as we go, any questions you have, the more the merrier. Please ask anything you have. There's no dumb question. There's a chat little button at the bottom in the center of your screen. If you want to throw your questions in there, we will get to them as, in the order that they come in or how they best fit into the conversation. So first off, I want to introduce to you Danny Schick, if he could give us a wave there. He is a very active owner in both real estate, and in range lending. So Danny, could you just introduce yourself really quick?
Of course. Good morning, everyone. Like Janae said, my name is Danny Schick, and I'm here to just listen and learn just like everybody else. And if there's any, value I can add, I'm happy to participate.
Awesome. Thank you. Megan and Jamie, you're both with Range Lending. Megan, could you introduce yourself first, and then Jamie?
Hi guys, I am primarily the processor and underwriter for Range Lending, so I work on all of the buyer pre-approvals for the loan officers we have. I am a licensed loan originator myself, but like I said, I primarily focus on the approvals and the processing.
Excellent, thank you. We're happy to have you. Jamie Nummer, could you introduce yourself for us?
Hey, good morning. My name is Jamie Number. I'm a licensed loan officer. I've been in the business for a very long time. Work with first-time home buyers, people buying second homes. I've done everything from construction loans to rehabilitation loans across the board. So happy to be here. Thanks for inviting me.
Awesome, thank you so much. And last but not least, Kevin DiVirgilio, can you introduce yourself, a little bit about your backgrounds for everybody here?
Sure. Hi, everyone. Good morning. My name is Kevin DiVirgilio. I am the company store leader at the Oak Park location. Been running that store for a few years now, and just happy to be on the panel here and provide some value on the buy side and tell you a little bit more about the market, what's going on in today's world.
Awesome. Thank you so much, Kevin. So like I said, I'm going to start off with just some basic questions that I have queued up for you guys to get the conversation going. I'll always direct it to whoever, but feel free to chime in and play off of each other to keep the conversation going. And then all of you guys, please throw your questions. Anything you have, throw them in the chat, and we will get to them. So Kevin, I just want to start out with you. Can you give us just a briefing on what's been going on in the real estate market? What's going to change here next week? What does it look like? Can you just fill us in on all of that first?
Yeah, absolutely. I mean, so, right now in our market, obviously it's been completely different. Our world was shifted not too long ago with everything going on. So we just had to pivot, and what we've been doing and having a lot of success with is virtual. virtual work like we're doing right now. Being able to work with buyers that are in situations where they need to get into a property and setting them up to have either a Zoom or a FaceTime, something along those lines, to be able to see property. And ultimately still purchase homes. Our supply right now is still relatively low. It's at 3.1 our monthly supply, meaning in 3 months, if we stop listing houses, there's nothing left. So it's still a very strong market. I'm sure we'll hear more about the mortgage side, but the mortgage side's looking good as well. And there's a lot of pent up demand. I know a lot of my clients are really eager and now I'm very excited because we got the great news yesterday that we'll be able to get on the road and physically get in the property in about a week here. So we're excited for that as well.
That's awesome. That's great news. Very exciting. Jamie Nummer, I want to ask you kind of the same question. Can you give us just a brief description? What's been happening in the mortgage industry? Has it changed a whole lot since the lockdown? And what's going to change for you guys now that real estate is opening back up next week?
Sure. Yeah, we're actually have stayed pretty busy throughout this whole time. And I've seen in the last couple of days, it's been very busy. Yesterday was just absolutely nuts. I'm sure Megan will attest to that. There has been a few changes in the mortgage industry, mostly relating to credit score requirements, reserve requirements, meaning money in the bank that you need to show above and beyond down payment. Rates are still excellent. There's still a ton of great programs out there. It's just even more so important. If you haven't been pre-approved, get pre-approved right away. Make sure your credit, your income, your assets, everything is reviewed in detail. If you were pre-qualified prior to the shutdown, I would recommend highly that you have that reviewed again, because your pre-qualification could have changed depending on your credit score and what's going on there. So still doing a lot of business. There's great first-time homebuyer programs. Many times rates can be in the 3s on the 30-year fixed. So it's still very good, but it's even more important now to make sure that your pre-approval is updated and in good standing.
Absolutely. Awesome. Thank you. So I want to get into some mortgage questions because I know that's what a lot of buyers are looking for right now, is how to get qualified. So Megan, what are some of the items that you guys look at when qualifying someone for a mortgage? I know there's a lot of variables there and they all have to line up for you to be able to issue a pre-approval for someone. Can you tell us a little bit about that for any buyers who are just starting to think about it's time to buy versus rent maybe?
Sure. The main two components are going to be your income and your credit report. So there's a lot of things we can tell just by reviewing your credit. And right now is a really good time to focus on having a good credit score, because the better the score you have right now, the better your qualification and process is going to be. And I want to bring to everyone's attention that they have opened up freeannualcreditreports.com to give you a credit report weekly right now because of everything going on in the market. So I highly recommend focusing on that, telling buyers about it. Again, it's annualcreditreports.com. And it used to be that you could only get one free one once a year. And it's now once a week. And it's really important for people to know that this is completely different than Credit Karma. This is what the mortgage companies are going to use. So that's a cool tool that we have available for buyers. Also, we can help buyers, give them some little tips on raising their credit. So we're not going to get too in depth. We're not like credit repair people with derogatory credit, but we do have some knowledge of how people can get their scores up. Another thing is income. Giving a complete picture of your income situation is really important. And they really tightened up on income guidelines right now. So if your income has been affected, you really need to be completely upfront and honest and get documentation to your loan officer, because that could affect your qualification. But getting your W-2s ready and your pay stubs and having someone review it. So credit and income are very important components of the process. Occupancy, houses you own, things like that. But just getting started by having an application in and having someone go over it with you is the best way to get started, and not try to use internet tools, but actually talk to a loan officer.
Okay, excellent. So I want to go over to Kevin really quickly. So with what Megan said and your experience in real estate, what's the first thing a buyer should do if they are interested in buying, say, this year, now that everything's opened back up? Do they talk to you first? Do they talk to a lender first? What makes the most sense?
Typically, we sit down and talk first. I'd like to be able to, make a good plan for my clients. And that involves, from the start, is just a buyer consultation. And, sitting down before we even talk to a lender, we got to figure out, what makes sense and if the timing makes sense now or if it's in the future. And they understand the process. Part of that process is obviously the pre-approval. So it's going to be kind of step one once we get into our consultation, but definitely sitting down and learning, where the market is, how it works, and what we can do to put ourselves in the best position to get them to their goal. And then we kind of we shift them over to some great lending partners we work with, and obviously Range being our number one partner, that's our go-to. And they have great value to add, and they do a great job with our clients, being able to coach them up and get them in the right loan program for their family.
Okay, excellent. So, Jamie, I have a question for you. And, just a reminder, you guys throw your questions in the chat and, we want to answer all of them. But Jamie, my question for you is, let's talk about mortgage rates for a second. If I'm a brand new buyer, I don't know a lot about mortgage rates. Are they the same for everybody? Can I get the same rate as my sister, or are they going to be a little bit different for every single person that applies? How does that work?
So, the same rates are available depending on what your credit score is. That's the biggest thing. The next factor is your down payment, how much you're going to put down on the house. So that is a factor as well. And it depends on the type of loan, right? If you're doing an FHA or a conventional purchase, could be different. And then cash out, like doing refinances, that's where we've seen the biggest change with interest rates. Now, going back to the original question, as far as interest rates, like I said before, they're well into the threes. Locked in a couple borrowers yesterday at 3.375 on a 30-year fixed on their mortgage rate, which is incredible. Wow. But you get into a cash out refinance kind of situation, the lenders have increase the requirements. If you're going to do cash out, it's become more expensive to do a cash out loan depending on what your credit score is. So the credit score is a really big factor, and the loan compared to the value of the home is the next big factor in determining what that rate is going to be.
Okay. Can you tell me a little bit about buying down the rate? I have heard that you can put a little more money put down a little bit more money on the home at closing to help change your credit score, not your credit score, your interest rate. Can you tell me a little bit how that works?
Yeah, absolutely. So most people are familiar with the concept, or at least the term buying points. And what that really means is you can pay more money to buy down the interest rate. Now, it's not a point for point thing. So it's not, hey, if I go from 4.4% to 3.75, it's not necessarily a hard percentage. Again, that can be determined by your credit score and the other factors. But yeah, you can absolutely buy down your interest rate. So that doesn't always make sense. And what we recommend is to have us put together what we call a mortgage coach, so we can show you the comparison. Here's what your loan will look like over the life of the loan. If you buy the rate down, here's what it will look like if you don't. And makes it really easy to see if it makes sense to actually do that. Generally, if someone knows that they're buying their forever home and they're going to be in there for 10 years, 7, 8, 10 years plus, then it might make sense to buy down the interest rate. But if you're going to stay in the house more short term, 5 years possibly, then it might not make sense, because you may not actually realize the benefit that lower rate would get for you. The recoup period is too long. Hopefully that makes sense as far as how that
absolutely
works.
That does make sense.
Good.
So Jamie, can I chime in on that real quick?
Yeah, please.
So just like more as a question, right? Like every single scenario is different, right?
Yeah, absolutely.
And it's so hard to really have any of it black or white. It's case by case, and just really that individual mortgage consultation for every single person. It's so crucial to really identify what's the best product for them, and then together help navigate the path to put that potential client in the best position possible, right?
Yeah, it is really crucial to understand, okay, is a conventional loan going to be better for you? Is an FHA loan going to be better for you? Does it make sense to, instead of doing monthly PMI, maybe we do what's called lender paid PMI, to where that's becomes a cheaper payment. So yeah, it is really a case by case basis. And like Megan was saying, don't just sit on the phone with the calculators. Actually talk to a loan officer and get in depth and find out what those options are. If the loan officer is not presenting some sort of a presentation to show you as a client what your options are and what's available to you, so you can pick what you want to do, then you might want to get a second opinion, because there are a few options for sure.
Excellent. Thank you. So I want to ask a question. This is a couple part question. It's actually going to be for Megan. We have a lot of questions in the chat right now about credit scores and stuff like that. So I have 3 questions. Jamie asked, and this is to Megan, Jamie Proper asked, what's the difference between Credit Karma and the credit score that a lender looks at? Can you tell us a little bit about that, Megan?
Sure. So there are 2 different scoring models out there, FICO and Vantage. Credit Karma uses a Vantage model and mortgages use a FICO model. I don't know the ins and outs about what they each do to determine your score. It's very complicated and it's not black and white. Otherwise, we'd be able to obviously get everyone's credit scores right where we want them. But I do know what factors kind of weigh in on it. But I can tell you that it's hard with those competing models, because people think they see a Vantage score and think that is what their credit score is going to be for their mortgage, and that's just not the case. And I'm really excited that we have this tool now where people can check their scores.
Bitch, I'm gay, so you know that I am next up. I got dildos, I got lube, what you want, son? My dick's small, you better like you ain't know this. Put my dick inside his mouth, he started choking, and dick in me.
All right. So,
wow. You did. We're good.
So yeah, we do have those, that information gets very confused out there. So Credit Karma is great for tracking. You can track what is on your,
I don't like
all right.
You can track what is on your, I can't even focus anymore, what your account balances are, and you can kind of see a trend in Credit Karma, like if your score is going up or down. But it's really important to get that actual mortgage FICO score to know what you're going to qualify for. So this is just going great. Teddy. Anyway, so that's the difference. But
okay.
There's no rhyme or reason to how you can get one up versus the other.
Okay, that makes sense.
I'll mute myself for a second.
You're good.
Can I add something to that, Janae?
Yeah, please.
So we hear a lot where a client will call, or a potential client will call, and they say, my credit score is 800. And I just bought a car last week, and the car dealership told me my score was that. It's important to understand that, and I'm sure Howard could attest to this, each industry scores your credit differently. So your credit score when you go to a car dealership is going to be different than your credit score for insurance, will be different than mortgage, and will be different for consumer. So like Megan was pointing out, when you go to Credit Karma and you get your credit score, then you talk to your mortgage loan officer and they pull your credit and it's a different score. And everyone always asks, why is it different? Credit Karma is a consumer credit report and is not going to score the information, the data, the same as a mortgage credit report, or for that matter, an insurance credit report, or for automotive finance. So it's all different. So you do need to have a specific mortgage credit pull to understand what your qualifying score is to buy a house.
Okay, that makes sense. I could imagine, getting a mortgage, you guys take a lot more into consideration and are a little bit more strict than all other areas of business that are looking at your credit and judging if you qualify for certain things, right?
Yeah, it's all weighted differently because each industry, like when you buy a car, if you've had some late payments in the past, they can look past that So the scoring, the data is weighted differently. With a mortgage, late payments are a big issue. So yeah, it's weighted differently by industry for sure.
Absolutely. Well, that makes a lot of sense, being that, a house is typically a lot more expensive than a car. So
Right.
excellent. That makes sense. So Megan, I want to get back to you, and Kevin, I'm not leaving you out. I got some good questions for you too. Megan, I want to talk about, so what score do you need to qualify for a mortgage? I know there's a lot of variables, but in general, what score do we need to see in our Credit Karma report before it makes sense for us to start the mortgage process? And how do we improve our score? Roger kind of asked some of these questions here.
So there are products out there for pretty much every score. There are products out there starting in the 500s, I would say. It's not going to be a great, beautiful process to get a mortgage in the 500s. And right now with conventional and your typical mortgages you see, conventional FHA, VA is 640 minimum right now at most lenders. There are a few lenders still doing 620, but you really want to get to that 640 mark, but that's not hard and fast. I wouldn't say don't start looking for a mortgage if you're not there, because once again, we can pull a score and help people get to where they need to be. We have a lot of tools for that. So I really don't want people to think, oh, I don't have the score yet, I can't do it. Ideally though, 640 is the range you're looking for. If you want the best pricing out there, it's 740 is your key. But again, I don't want people to think they have to wait till they have a 740 to start. That's just the top tier pricing. There are adjustments if your score isn't that high. So to get an idea, 740 is top, 640 is like kind of where you want to be, but there are products out there for a range of scores. So no one should be deterred from at least getting the process started. We've had people open secure. This is the main thing, is if you don't have revolving debt, if you open a secure credit card, which is basically you put down a deposit and you're borrowing money against yourself, we've seen scores jump 40 points in a couple of weeks. So secure credit cards, if you don't have if you don't have open accounts, is the way to get started. And we've had people with no scores because they have no credit history get a score in the 700s from opening one of those.
Okay.
So that is
want some sort of debt or revolving credit.
Yes. To get a good, there's a misconception out there that to not have any balances means you have the best credit. They want to see you're utilizing debt. So another key factor is they don't want you maximizing all your credit lines. If you have a $5,000 limit and you've got $5,000 on your card or $4,500, they see that as you're maxing it out too much. They want to see between like $10 or $20 and 10%. The lower you go, the better your score gets. But if you have like $20 on a credit card, you're going to maximize that. It's going to show that you're using it but paying it down every month. So that's another thing we do to get scores up, which costs money. But if you pay down your revolving debt, which is like a credit card or a line of credit, your score will dramatically go up. So if we have people with 5 credit cards maxed out, unfortunately, it's going to cost them some money to get their credit score up, but they can pay those accounts down and immediately see an improvement.
Okay.
So those are the few basic ways. We don't get into, on our end, collections and all that. We kind of refer them to experts for that. But the basic ways are just to have debt, open debt, or pay down your debt. So we've seen, and Jamie is the loan officer that gets the most into that. Him and I like to help the clients rescore their credit, get their credit up, get them in the right direction once we have them as a client and show that value that we can add.
Okay. Excellent. So I want to switch gears here, and I want to get Kevin involved because we've been talking a lot of mortgages, and we have a couple more mortgage questions coming up from people here watching. So I do want to get to those shortly after this, but I want to get rolling on a couple questions a little bit more real estate related in hopes that sparks some other questions that you guys have on the real estate side as well. So Kevin, couple questions for you. So are you still seeing elevated home prices with everything going on right now?
Prices are holding steady. So, we've been in a great market, and home values have been in a good place for multiple years, as we all know. We haven't saw a shift in prices at all. With our inventory, again, being low, we have roughly, I believe, right around, let's see here, 22,000 properties on the market in Macomb and Oakland County, which is which is super low. If you look back at this time last year, there was about 26,000 properties on the market. Not a huge difference, but just given the fact that there is a lot of pent up demand, a lot of people that really want to get into properties and take advantage of not just great rates in this time. What we're seeing with prices is pretty stable. If anything, they're increasing a little bit.
Really? Okay. So with prices increasing though, does it still make sense to think about buying a home right now? Or do you think prices are going to drop here in a couple of months once things kind of roll out with, all this pandemic and people are getting back to work? What are you thinking?
Well, I mean, I wish I had a crystal ball and I knew what that looked like. What I do know is what's going on, right now. And I do think it's a good time to purchase. And a lot of that has to do with, our rates and how cheap money is to borrow. And if you think about, making a purchase like this, you're paying it off over 30 years. And the rates in borrowing money at the right price, makes that dollar amount make a lot more sense over 30 years. If you look at an amortization schedule, which can be scary for every buyer out there, every homeowner. But if you look at that and you can shift prices maybe 5%, but then put a point on that mortgage and look at it that way, and things level out. And that's really what we see. Prices in the market start to level out. I don't foresee anything happening in the near future here. I think our market's going to stay strong. I hope that we get some more inventory for our buyers out there in the near future, because I know that there's not a whole lot available for them, and I do see that coming. I know there's a lot of clients out there that are kind of chomping at the bit to get their properties photographed and on the market. So we're excited for that as well.
So Kevin, I have a question for you on that topic.
Sure.
In any market, there's always the ability to find opportunities under market value, regardless of the market you're in or what phase of the cycle you're in, right? What are you doing right now to help get your buyers the best deal possible on a home?
It's a great question, Danny. So I think it really comes down to first just identifying what property and what they're looking for and their goals. But right now it's been a great time for me to get great deals for my clients when we have some leverage, because there is sometimes a little bit of fear out there in this market. So sellers that have their home in the market, let's say they've been in the market for over 30 days, 60 days, 90 days. That's an opportunity, and right now is a good opportunity with these properties not being shown, days on market going up, to get into a home and make an offer that maybe wouldn't have made last year at this time, and be able to negotiate a price that everyone's happy with and ultimately the right deal for the buyer.
Awesome.
Excellent. Good question, Danny. Thank you. So Kevin, one last question for you, and then I want to get to Christina and Michelle are both asking some questions here. So what advice can you give a buyer who is looking to purchase a home versus renting right
now? What advice could I give a buyer? Well, I always say, this to a lot of people, and I've rented in the past, everyone has, you're always paying a mortgage. You're always paying a mortgage. It's always good to pay your own mortgage and build equity and have an investment that makes sense in the future. On the other side, you're paying somebody else's mortgage, and you're always still paying, something called profit for somebody else. So, not everyone's in a position, obviously, to purchase, but if you are, and if you're thinking about it, definitely talk to a loan officer, because you might be in a better position than you think. But the home ownership is, right, it's the American dream that allows you to build your family and have ownership, which is great. So, my advice is, if you're thinking about it, the difference is that, it's ownership, it's having the right to do whatever you want to your property, and you cut out that profit piece that you're paying for somebody else.
Absolutely. Okay, excellent. So I want to get to Christina's question, and I know Megan, you kind of answered it in the chat there, but oh no, you answered Michelle's question. I'm going to ask Christina's question first, and then we'll talk about Michelle's. So I'm going to read this to you. Christina said, She has a couple questions here. One is she's looking at 15-year versus a 30-year fixed. Will a 15-year always have a lower interest rate? Is it the better option? I've heard 30-year fixed mortgages aren't always a good idea. Can you answer that for us?
I think Jamie, do you want to jump in on this one?
Yeah, absolutely. So 15-year rates will typically be less than a 30-year mortgage rate. As far as it being a better option, I don't want to be vague or not specific, but it really depends on your situation. The last thing we want to see someone do is get into a payment on a 15-year mortgage, and then they're house poor every single month trying to keep up with that mortgage. The rates will be better on a 15-year, but not so much that it's worth putting yourself in the poorhouse, right? If it's easier for a person to manage a 30-year payment than it is a 15-year, well, on the months where you're doing great, go ahead and make more money, pay more down on the principal, and you'll actually accelerate the payoff on the house. So for instance, if you have a 30-year mortgage, you make one extra payment a year toward principal, you're going to shave off about 6 to 7 years on the mortgage. So
Wow.
I don't want to be vague, but it really just depends on case-by-case basis.
Okay.
For sure. And
Throw in your contact information in the chat real quick. That way, if Christina wants to, she can reach out directly to you and talk a little bit more about her specific situation and see what would make the most sense for her.
Yeah, sounds good. Thanks for asking the question, Christina.
And she has a second part to this. And I think maybe, Megan, you're better to answer this part. I don't know. You guys can play off each other. But her second part is, how much of your banking history is considered? Are you able to elect how much you want to put down despite the amount you show in your account? And in parentheses, she says, if I have 20 grand in my bank account but only want to put 7 down as a down payment, is that okay?
It all depends. So if you are able to qualify with the minimum down, which is 3% on conventional for first-time home buyers or buyers that meet income qualifications for something called home ready or home possible, there are limits to how much income you can have on that, then 3% down is an option for you. If you go FHA, 3.5% down, but you have to qualify for that. So if you don't have a strong enough credit score, you may not be able to qualify for that. So it really depends, again, on your individual application and situation, but of no way do you have to put down as much as you have. That is completely up to what you qualify for. We have many borrowers with money in the bank that still put minimum down because they qualify for that. Obviously, when you put minimum down, you will have a little bit of a higher rate. Sometimes you may have a higher payment. So again, you have to figure out what's best for you. Sometimes you actually have a higher rate when you put 20% down. So there's all sorts of things that go into this. And that's something you can go over with your loan officer. But if you have 20K and you qualify for 3% down, you do not have to use that whole 20K.
Okay.
Can I chime in on that one?
Yeah.
So that will help you if you have the 20K in the bank because you have reserves. So if you can show when you're going to close on a mortgage that you have money in the bank above and beyond what you need to bring to closing. So in other words, if your mortgage payment is going to end up being $1,000 a month and you can show that you have $3,000 or $6,000, so that would be 6 months of payments in the bank, that will actually help your approval. So you don't have to use it, but it will play to your advantage.
Excellent.
So on that note, sometimes people have a retirement account they don't want to touch, right? But showing you have 100 grand, 50 grand, 30 grand in a retirement account really strengthens your profile. So sometimes if we're having a hard time getting a qualification or need to boost it up, it doesn't mean you have to use that or tap into it. It just shows, look what I have, and your qualification gets really a lot stronger.
Excellent. So she has a second part to this question as well, and it's about student loans. How do those factor in? If I have a high amount of loans, but monthly payments are timely, how will that impact my chances of qualifying at a good rate?
Student loans are a good time. There's a lot of different things that can go on with student loans. If you have a conventional loan, you can use your payment reporting or your income-based repayment plan, which can be very low. If there's no payment reporting or you're in deferment or forbearance, unfortunately, we have to count 1%. we've seen a few people recently with 100, 200 grand in student loans. We have to count 1% of that. So that's a pretty high payment. So I recommend getting on an income-based repayment plan, making sure you have a payment reporting that's not 1%, because you can really get that down. For FHA, we do have to count 1%. Whatever's higher, the payment reporting, or 1%. So yeah, student loans can be a big factor in your qualification. There are a lot of consolidation programs out there, income-based programs out there, that I really recommend if you have a high amount of student loans and you're looking to get a mortgage.
Okay. I can imagine you come across student loans quite often.
Yeah, it was kind of, when I was an underwriter at a lender, it was kind of a big focus on what could really kill a loan, affect a loan. That doesn't mean you can't get a mortgage. You just have to, I think consolidation is something a lot of people should probably do before they apply for a mortgage if they have a high amount of student loans.
Okay. So again, you guys can reach out directly to Jamie and Megan. Everybody's gonna have their contact information in the chat here. We'll throw it all in at the end as well. That way you guys can ask some more specific questions. I wanna get to Michelle's question here. Michelle says, and here we'll throw this one, Megan, I wanna ask you this one again, sorry. So question is regarding credit score. My Experian and Equifax are very close, but my TransUnion is lagging by 76 points. I've been monitoring my scores daily and have cleaned everything up, but the TransUnion has the same information as the Experian and Equifax, but less of a score. When do I apply for a house? How will this all factor?
Yeah, that third score doesn't matter. You can throw it right out the window. We really care about the mid score. So sometimes that just happens because each bureau looks at things differently, which is why we take the middle score. So I wouldn't focus too much on that, because it just really doesn't matter. If you have 2 decent scores and you need to raise your score, at least you have a good mid score still to use. So that third score is really just, put it out of your mind as something to be concerned about right now.
Excellent. All right. So Roger asked this question a while back, and it goes hand in hand with a question that Michelle asked as well. So Jamie, Roger asked, what's a rehabilitation loan? And Michelle asked, being a future first-time home buyer, say the house is lower in price than my approval, but the house needs some repair. Can I use some of the remaining approved amount to do home repairs, or is that all on my own? So I think those two questions kind of go together, right?
Yeah, absolutely. It makes a lot of sense. Okay, so rehabilitation loans are a different animal in that you can get money to do the repairs needed on the home. The trick is, as you're alluding to, if the house is worth more, then can you use that additional amount? So yes and no. Okay, you have to do a rehab loan, a rehabilitation loan. And what that involves, the biggest factor in doing a rehabilitation loan is going to be the contractor. Because typically, and I've done a lot of these, the contractor is the linchpin in the deal. Because most contractors are very good at building and helping you do the add-on to the house. They're not great at chasing paperwork and working with the underwriters. Okay, so they have to go through an approval process, submit plans and specs, all that. So that can make it a little bit more difficult. So the most important part, if you're going to do a rehab loan, we can definitely help you with it. You have to have a good contractor lined up that is agreeable to making sure they go through approval with the lender, turn in their insurance, their license. They have to submit plans and specs, et cetera, et cetera. But it's simple. If you do have a great contractor and you do want to do a rehab loan, if we've talked to you and pre-qualified you, it's really simple. You find the house that you like. You say, all right, this is what I'm willing to pay for the house. Go ahead and make an offer on the house. Get bids for the work that needs to be done. Those bids will be submitted with your purchase agreement, and the appraiser will appraise the house as a subject to, based on those improvements being done. Then we'll go through the process, close the loan. Then the contractor can start their work, and there's a series of draws. The work needs to be done typically in 6 months from the time of closing. And then you can move in and it's just a normal loan at that point. There are quite a few moving parts with a rehab loan you do need to be conscious of. So there's a lot of questions and things we need to get firmed up to understand if that makes sense for you to do.
Okay. Excellent. Thank you very much. I think that thoroughly answered that question. Kevin, I have quite a few questions here for you. So for a first-time home buyer who's never been through this before, can you talk to us about what money they need to have saved and what money will cost them up front to start the process? I know realtors work on commission.
Mm-hmm.
What do you charge to help a buyer find a home? And at what point can they go look at houses?
So to start, we don't charge anything to our buyers. We work with the buyer for free ish. Our commissions come from the sell side. So we're able to locate and find the right property for you. The seller is the one that pays our commissions. So, to sit down and go through a consultation, there's no cost at all to see if we're aligned and it makes sense to work together. No cost at all. So we do that to every single person that we're considering working with. And the second part to your question was in regards to first-time buyer and what type of cash do you need to get the process started. It's a little bit, I always want to steer that to a lender, but just a general rule of thumb, if we're going to be at a what's called the $200,000 price point, I always say if you have around 5% of that, you might be you're close to a situation where you can make it happen. There are things called seller concessions, which we can work into transactions, which is basically money back from the seller at closing to help you with your down payment, prepaids, and escrows. So you bring less to the table, more or less. So there's there is that misperception in the first-time buyer world that you need 20% to purchase a home. That's definitely not the case. Like Megan mentioned, it's it's as little as 3% down. So there's a lot of programs out there for first-time buyers, and working with Range, they're definitely a great partner to talk to anyone that is interested and maybe didn't think they had enough funds to get the process started, but hopefully after hearing this you get a better understanding and you might be in a better position than you think.
Okay, excellent. So what about like a deposit, an inspection, appraisal? I know there's some things that take place before you even get to the closing table. You pay for all those things at closing, or how does that all work?
Great question. So there is some cost up front. Once we do find the right property for you and your family, within the first 2 days, banking days, we need to put down an earnest money deposit, which is a good faith deposit. And what that's going to be is typically 1% of purchase price. So that same example at that $200,000 price point, roughly $2,000 that we're going to put down on the property. That's going to go towards your closing costs, prepaid, and escrows. Within our first 7 days, we are going to inspect the property. We want to hire a professional to do that to make sure that we're structurally sound. We have our big ticket items are taken care of, and if not, we need to renegotiate or we have a contingency to get out of that deal if we need to, if the property doesn't make sense after inspection. Inspections can range anywhere from about $250 up to even $700, depending on the size of the property. That is a cost from the buyer on the front end within the first week. The other cost is the appraisal on the property. That is a cost on the front end as well, which the lender is a third-party accountant. Your lender is going to reach out to you once we do get through that due diligence contingency inspection time. Our lender is going to reach out to you and give you a call, and that's again roughly $400 to $500 for an appraisal on the property. So those are the upfront costs prior to the closing table. You're looking at, let's call it roughly $1,000 for an inspection and an appraisal. And your earnest money deposit, which is something that goes towards your closing costs and down payment.
Okay, so that's not the earnest money deposit's not in addition. You pay it up front, but it comes off at the end.
You got it. Yeah, it's a credit. It's a credit for the buyer.
Okay, cool. So Danny had a question, and it plays into this, so I want to throw it in here. His question is, how far in advance should the buyer consultation happen? What if I'm just considering the idea of buying right now?
If you're considering it, it's always good to get information, and I've always thought that's best. I would say putting a plan together even if you're a year out, 2 years out would probably be max. You know, we're going to revisit it before we get out on the road. But you know, if anyone's interested and wants to learn more about the buying process, you know, I know myself and my team would be more than happy to just tell you, you know, what that process looks like from start to finish. It takes about 30 minutes. We sit down and we have a nice handout to walk you through, you know, exactly what the buying process looks like. And I know that the clients I work with on the buy side always find a lot of value in that, and they feel more comfortable knowing what's happening. You know, there are those people out there that have purchased homes in the past and they had no idea what was going on. And you're nervous and you have anxiety because you don't know what's happening. So, you know, what we at Real Team, what we want to do is just coach our clients up, and so they know more or less what we know when it comes to, you know, this is step 1, 2, and 3. And you're always going to get a call from us, you know, before those next 2 steps happen. So you know exactly where we are in the process, what's going on in the back end. And having that front end knowledge is going to be helpful and give you more confidence when you do find the right home.
Okay. So you kind of answered Danny's next question, but I'm going to read it to you anyways. He says, what opportunities could come out of the buyer consultation to make it worth the potential buyer's time and energy? I think you answered that with knowledge and, you know, making sure that they're steps ahead. What else do you think would come out of a buyer consultation to benefit the buyer?
I mean, I think, you know, one thing in general is just having a better understanding of the market that they're in. You know, if you know, a consultation, sure, I'm going to tell you how the process works, but we're going to talk about the market and that specific market that you're interested in, whether that, you know, let's say it's the Woodward corridor and that's where you're interested in looking. You know, that might look a little different than maybe Elmont. So, you know, a nice part about a consultation is, sure, we're going to learn more about the process, but we're also going to learn a lot about your interested market. And we're going to talk about, look at some stats and some details and some properties together, just to see what values are looking like and how to, you know, navigate through the buying process in that specific market.
Hey, Kevin.
Sure.
So just before we move on, I know I get this call a lot. I'm assuming you do too. It's, hey, Kevin, I'm thinking about buying a house in the next 6 months to 2 years. I'm not really sure. Where do I start? Right. So I know you'll set them up with a lender, get them on a search. I don't know. Do you experience the same thing where a lot of times they say buyers think they're a year out and then all of a sudden that perfect home hits the market and then they want to jump on it, buy it. And because you did that consultation 2 weeks prior to that perfect home hitting the market, they were able to seize the opportunity, jump on it with a strong, well-prepared offer before another buyer jumped on it.
Yeah, absolutely.
That's the opportunity.
Yeah, it happens more times than not. You know, it's usually the first time, you know, a buyer consultation will happen, and there might be a time frame, like you said, it might be 6 months, and maybe 6 days later. Sometimes we find the right home, and it's just good that, you know, that client has the knowledge and they're comfortable. And, you know, the only way they can make that decision and see the house that they love and move forward is because they have the knowledge, they know what it looks like, and they know they're working with a team of professionals that are going to support them and ultimately take care of all their needs and wants and get them to their goal.
Think about even the seller too there, Kevin, you know, because I'm sure we have sellers and buyers. We're talking buyer, but a lot of times, you know, sellers own their current home. They want to move into another home. Many times we'll see that next house hit the market, but they haven't taken any steps yet on their current home. By having that conversation early on about just considering the idea of moving, what can you do to give that, you know, that potential seller / buyer a chance of getting that perfect home?
Yeah,
we know we can seize on that opportunity, right?
Yeah, absolutely. So it's prepping them on what it's going to look like and making sure that they're have a good understanding of the value of their home and what we're going to do for the sale of their current home, and then usually getting our ducks in a row. We want to get some media done. We want photos. We want to just be in the right position to basically press go. And, you know, if they find the right home, whether they're contingent or non-contingent, they're still going to want to have their property. No one wants 2 mortgages, right? So they want to have their property ready to go as soon as possible. So we're going to go over a plan for that as well. You know, if you're not a first-time buyer and you have a home to sell, but you want to make sure that you secure the right property first, great. You know, we can put together a perfect plan for that and have your home ready for the market, and still be out there actively looking for the right property for you, and put the contingencies in place to protect you on both sides.
I can imagine a lot of your job, Kevin, is juggling timelines and making sure everything lines up exactly how it needs to go, right?
Yeah, it's and I think that's something that is usually a big fear for a lot of clients, especially homeowners that are contingent in selling their property to buy their next home, which is a lot of homeowners. They're nervous about the timeline. When my home goes up now and it goes under contract, am I going to be able to find something in time? How's it going to work? So it's something that we're going to sit down and go over. There's different things that we use. Occupancy is a huge one, and then there's also contingencies giving you some time or a statute of limitation to secure a property that makes sense for you. So it's a constant thing that I don't care how many deals we do together, it's going to be something that in the back of the seller's mind. If I sell my home, what next? Well, we're going to take care of you, and we're going to put together the right plan and protect you and your family and make sure it makes sense.
Awesome.
Hey, Janae, if I could jump in on this, I think for a lot of people that are hesitant to buy the first home and have that consultation and get going, if we can shift the conversation, even the real estate agents too, to their monthly expense, their monthly payment, and get away from that purchase price ticket or that interest rate they dwell on. If they can see, like Jamie's very good at giving a presentation to outline what that mortgage will look like to you month to month. And I think when you get that in front of a first-time home buyer and they're able to see this isn't that bad, this is kind of like my rent, and let's not focus on a 200 or a 300,000. Let's see, you're comfortable with 1,200 a month. Let's see what that looks like in Royal Oak. Let's see what that looks like in Macomb. Send me an address of a house you like. Let me do a presentation for you so it's not as scary. You know what to expect. And if you're in a price range where they're comfortable with that payment, everything else is going to be a lot smoother. Because I think a lot of people, what's the rate? What's my rate? Someone else said I should have this rate. And you just don't want to focus the conversation about rate. And purchase price can be scary. Hundreds of thousands of dollars sounds really scary. But then you see the breakdown of your payment, that's not actually scary, right? I'm already renting in Royal Oak for $1,800 a month. I should just buy. So it's something that'll click in their heads once they see that. And I think good real estate agents are going to make sure they get with the lender and get that presentation, because once they see that, they're going to be ready to go. And they're going to be in the range that they're comfortable with, instead of just focusing on, oh my God, I can't spend $300,000. You're not spending $300,000, So I think it's really important to steer the conversation away from rate and purchase price and get stuck on that payment and those expenses monthly.
Absolutely. Yeah, that's dead on, Megan. So Kevin, with all of this, so we have a buyer consultation, you talk with a lender, it sounds like you got to be pre-approved, right? So what is the process of, making an offer on a house? It sounds like, starting next week, we're going to be real estate agents are going to be able to go into homes and take buyers out again, right? So what does the process look like of actually making an offer? And what is the timeline to get to the closing table and be able to move in?
Cool. Well, the process is, first we need to get out there and find the right property. So, scheduling showings, looking at neighborhoods, properties, finding one that makes sense. And once we do find one that makes sense, we want to write a smart offer. We want to make sure that we're communicating with the other side, meaning the listing agent on the property, to figure out, what's important to that seller outside of price, because it's not always just price, and it has been a competitive market with multiple offers on a lot of properties that are priced well and in the right locations. So, what we need to do is we need to be competitive and find ways to put our best foot forward. Once we do secure a property for you, that process is going to typically take a day or so to negotiate. And then we move into a due diligence period, which is typically 7 days. This is a time to really take a step back, make sure it's the right home, and inspect it and make sure everything's in good shape. From start to finish, moving through a property, it's about 45 days right now. 7 days due diligence. From there, we move over to the lending side and over to title and get the underwriting and everything else done. But the contingencies in place we have is a due diligence. We also have appraisal contingency, as well as a final walkthrough for our buyers is a typical purchase agreement.
Okay. So like 45 days, you said, right?
45 days.
Okay. Excellent. So I have two more questions for you, and then I want to move on and get back to a couple mortgage things that we had come in. So Michelle had a question, and her question is, if I decide against the property based on inspection or finding another home, can I get my earnest money deposit back?
Absolutely. Yeah, that's what the first 7 days are for. To take a step back and take a breath. Let's make sure that this is the right property. And I know with our market being as quick as it is, and competitive, like I said, multiple offers on a lot of properties. Some of these properties are selling in a day, less than a day. So we have to move quick to to secure the right properties. But the nice thing is, once we do get under contract, we got a little bit of time. We got time to inspect that property and see if it makes sense. And if it doesn't make sense, that's why we have that contingency. And we can get out of that contract. Your earnest money deposit is returned back to you at that time. The only time that is going to be at risk is if we get through the entire process and we just decide for no reason that we don't want to close. And the earnest money deposit would be at risk at that point. But we make sure we keep it nice and safe for your closing.
Okay. So one last question for you here. Say I'm approved for 150,000. Can I still go look at houses that are maybe 160,000 and make an offer at 150?
I always advise against that, and the reason behind it is I would hate to bring you to a home that's out of your budget and you fall in love, and we have that heartbreak where we're going to write an offer and we're just not going to win. If it's a property that's been in the market for maybe a little while and we can clearly see and then look at the numbers and it's maybe not priced appropriately, it's a little bit overvalued. And let's say it is at 160 and we're a 150 buyer. Well, sure, let's go take a look and let's see how motivated that seller is, and put an offer in that within our budget and see if we can put the deal together for you. But off the beginning piece, I would say let's try to stay in your budget to start. And obviously, if you see something you love and it's been on there a while, well, let's look at that and look at the numbers and see if it makes sense.
Okay. So I assume if I'm approved for 150,000 and a lot of these properties, say I'm looking in an area that's moving super fast and there's multiple offers on houses, I assume that houses are getting offers above asking price. So if I'm approved for 150, but all these houses at 150 are going for 155 or even 160, should I be looking at maybe a 140 max price point?
I think you need to look at anything within your budget. So I think still looking up to 150 makes sense. Every property is specific. Every property is different. There are those situations where it's highest and best, and maybe we can't achieve that, but that's part of the home buying process. And usually things happen for a reason, and you end up in the right property. So, I would say look up to your purchase price, maybe a tiny bit over what you're qualified for, and keeping an eye on that property if it is over your budget. If it's been on the market for a longer period of time, well, there might be some room on it. But yeah.
Okay. Excellent. That makes sense. So I have just a couple quick questions. I want to switch back to mortgages. So I have 3 questions for now. If anybody has anything else, please throw it in the chat. Megan, this question's for you that came in. It says, can you give us some information on debt to income ratios and what should be ideal for an FHA loan for, debt to income ratios?
Well, I'm going to start with the same thing we've been saying. It all depends on your situation. If you have a high credit score, typically your debt to income ratio can go higher. Before this whole crisis, if you had a good credit score, we were seeing, and good is relative to your situation. If the system liked your credit profile, I was seeing up to 56%. And it takes into account your qualified income. So it's not just like the income on your W-2, it's your qualifying income, the way the lender calculates it, divided by, so your debt divided by your income. Your debt does not take into account your utilities, basically just all your installment and revolving debt and any housing debt you have related to owning homes or rent you might maintain if you're buying an investment property, divided by your income. I've seen it go up to 56. Right now it's tightened. A lot of lenders are capping 40, 45 unless you have reserves. So that really impacts the qualification. Some lenders are still taking it. So again, what lenders do you have access to? What is your loan officer able to get you approved at? I still have it all over the board with different lenders and different clients. So the good news is there is a potential to go up in the 50s if you get the right program, the right lender able to help you with that.
Okay. So Jamie, question for you. This one came in and it just looks like a username, so I'm not sure who this one came from, but question is, if your lender is stating that the estimated closing costs are about $15,000 on an FHA loan, but you only have like say $9,000 to $11,000, is this negotiable?
Yes, generally it can be. It depends, and that's really where you want to make sure that your loan officer and your agent have a great relationship, because in that instance, maybe you can ask the seller to pay some of your closing costs. You can ask for some seller concessions. Maybe you're a hero and you qualify for a hero's rebate. So you want to make sure that have a conversation with your loan officer. So quite often we're able to utilize seller concessions. In other words, ask the seller to pay for closing costs and prepaids. So you're only bringing in your down payment, that 3 or 3.5 or 5% down. So that's definitely doable. And of course, if you're a veteran or in the rural areas, you could possibly qualify for 100% financing and then get seller concessions. So yeah, we can definitely help you leverage your money to get the most out of the situation, for sure.
Okay. So I have a question here for Megan. Just in general, what's the difference between you guys at Range Lending and someone going to their, where they bank or their credit union?
The main thing I would say is options. We have options. We work with multiple lenders. It just allows us to shop around, where if you go to your bank or credit union, you have one product that they have. It's a little bit different with licensing too. We are licensed, where loan officers at a bank, not necessarily licensed. That might not even be the main part of their day. They might not get a lot of mortgages in. And the service we're able to give, we don't clock out at 5. We're there for our clients night and day. There's just so much more we can offer. Just think of it more like the speed, the service, and the options that you get. So mortgage brokers are just able to provide a lot more, in my opinion.
Okay.
If I could chime in on that.
Yeah, of course.
It's all about experience. When you work with Range Lending, you're working with people that have been in the business for years. I think combined, we have over 50 years of experience in the business. So that's a big piece of it. If you call some big online company, you might get a new person that's only been in the business for a year. They don't understand underwriting guidelines. They don't understand, oh, hey, you don't qualify for this, but we do have another program. So experience is a big, big piece of it.
Absolutely. Okay. So Kevin, I have one last question for you, and then we'll probably wrap up here so everybody can get back to their day and their families. Kevin, question for you. This one came from Danny, but it's a perfect question to wrap up. Why should a buyer hire you or just any buyer's agent instead of reaching out directly to the listing agent on a home that they like?
Great question. And I answer this question all the time. It's listing agents work for the seller. They're fiduciaries to the seller, and they represent them. So you hire a good buyer's agent to give you advice and negotiate. A good negotiator on the buy side that's working for you, not the other side, is always the right play. Anytime that you think about doing a negotiation, you don't want to be on the other team, right? You want to work for the team that you're working for. And when you go to a listing agent, they don't work for you. They're working for the seller. Their best interest is in mind, and it has to be legally. So good buyer's agent's going to be a huge deal for you.
Okay. Danny threw one more question at you here. So why not just list for sale by owner since the market is so hot right now?
Why not list for sale by owner because the market's so hot right now? Well, as a buyer's agent and working with a lot of buyers over the years, I'll be completely transparent with this. If you have a buyer that's looking in an area, and what we're doing is we're using the MLS to send our buyers properties. But if they send me, let's say, 7 properties in Royal Oak, and one of them's a for sale by owner, it's probably the last property we're going to show. The reason behind it is there's no guaranteed commission on that deal for a buyer's agent. And selfishly, we work, this is a living this is how we make our living. So we want to work with someone where we know our commission is going to be built in, A, and B, we're working with a professional, someone that has experience in the home sale process. So working with for sale by owners that typically don't have experience can be difficult. Because what you want to do is deliver a great experience for your client as a buyer's agent, and it's that can be tough to do if things don't work out perfectly through a transaction. Maybe there's an appraisal issue or something along those lines. And if you're working with someone that's experienced that in the past, like a professional realtor, it's usually a hurdle we can get over and work together to make everyone's goal happen. Where in the for sale by owners, it's different. They don't have that experience. They don't know how to react to those situations. So deals tend to fall apart more times than not if there is a bump in the road.
Okay, excellent. Well, I appreciate all of you guys today. I think you guys, our panelists, did an excellent job. They provided a ton of value. I hope we answered all of your guys' questions. Can we all unmute really quick and give our panelists a little round?
Good job, guys.
Good job.
Awesome. Thank you guys so much. Appreciate it. Here to provide all of you with value. If there's anything we can do for you, please let us know. I did record this today, so you can find this on our YouTube page if you'd like. You can email me, and I can help direct any of your questions to the right person. I get anything at info@mirealteam.com. But if Kevin and Danny and Megan and Jamie, if you guys can all drop your information in the chat so anybody here that has direct questions for you guys can reach out to you, that would be great. Thank you guys all again. We really appreciate it. We're so glad to see some new faces here, and we'll let you get back to your day. Have a good one, guys.
Have a great day, guys.
Bye.
Thanks, everybody.
Thank you, Erica.